Quick check on the markets. The Dow. Woof. Boy, they're phoning this one in, aren't they? Down just a fraction. S&P down just a fraction. NASDAQ, they're down 5 points, so I guess we shouldn't complain about the others.
That's a plunge, relatively.
Yeah, let's get to our Friday trade. Wayne Kaufman joins us, Chief Market Analyst with John Thomas Financial. Oh, and look who's here. I haven't seen you in dog's years. Jerry Castellini, President and CIO with Castellart Management. He's in Chicago, so he got up, relatively speaking, an hour earlier. So we'll let Jerry start. Give us a Friday trade, Jerry.
A few things. Remember, the first week of the year generally is rebalancing portfolios from last year's winners, so don't be dissuaded by some of the weakness in maybe tech or energy. Those are areas you want to stay focused on. We like Halliburton, the other name Goldman didn't mention this morning, that should work the same way. Also, for the first time, look at names like the big banks. These were not participants really last year, but something like Citicorp probably sits in the middle of what the Fed's trying to do here in maintaining a steep yield curve and trying to recapitalize these big banks. Don't be surprised if a Citicorp moves substantially over the next 6 to 9 months.
Okay, Wayne, how about you? Got an idea?
A few of them. First of all, TRW Automotive, which stock I've recommended before on the show. It's done very well. They've beaten earnings estimates by 90% the last 4 quarters. And they're not only benefiting from the recovery in the automotive industry, but they get more product in each unit. So, for example, when you have a Goodyear tire, you're only going to have four tires on any car. But TRW can have more and more electronic components within each unit, so it's a double benefit.
Plus, there was a huge bloodletting in the parts providers, or I should say component providers, because there's no such thing as a parts provider anymore. They're whole components delivered.
That's right. The strong survive, they're lean and mean. Then also Eastman Chemical, EMN, a diversified chemical company, and they do, their biggest area, 38%, is in consumer packaging, such as chemicals that are used for plastics in bottles. And over in China and India, water is a huge issue because their water supply stinks. So huge amount of bottled water. But the thing about Eastman that catches my eye is they beat last year's earnings by 100%, but the estimate for this year is only an increase of 5%.
I'm sorry, I got to cut you off. Jerry, I apologize to you as well, but we're going to go to Bernanke because he has finally begun talking. Thanks, guys.